Good morning. Welcome to another episode of College Coffee Talk. Pearl and Andy Lockwood here from the Subterranean Studios. Good morning. Good morning, Pearl.
Good morning, Andy. Hi, everybody.
So we have a good show today. This is sort of a sneak preview / teaser for our upcoming how to slash college costs by 56.1%. Even if you think you can't possibly qualify for any type of financial assistance, that is happening this Wednesday. We're going to talk a little bit about a chunk of that, which is the financial aid secret formula. You ready to divulge some secrets?
The top secret?
Medium to high.
Save some secrets for the webinar?
You don't, yes, and you don't need clearance to hear it today.
Okay.
So before we get started, our traditional simultaneous synchronized beverage. We're drinking, what are we having?
Lattes.
Okay. 1, 2, 3, enjoy. Ooh, that is good. That's a good one this week. Let us know if you are having or what you're having in terms of beverages. I am just going to attempt to post the link to our workshop in the chat. If you guys have any questions, this is your moment. Put them in here. All right, let me see if I can do that successfully. So we're shamelessly promoting this presentation that's happening Wednesday night. How to slash your college costs by 56.1%, which is not a random number. It's actually the average tuition discount as per the National Association of Collegiate Business Officers. Very, very fun group. So say hi, let us know what you're drinking, and then we'll get right into today's content. I'm trying to see who's with us today. Someone in some language I can't.
Christine is with us.
All right, good.
Christine.
In English. That's terrific.
Yep.
And
We welcome all languages.
and a new client of ours.
Yeah.
That's who you're talking about.
It is.
Christine Bryan. Okay, good. Because we have Christine who works for us.
That's true.
Yeah. Alrighty. So let's get right into it. So financial aid, there's different types of financial aid. There's need-based aid, which is what we're going to be talking about. And I would say maybe 40%, 35% of our clients qualify for need-based aid. Most don't. However, it's pretty significant. Then there's also merit-based aid, which is outside of the scope of today's discussion, not Wednesday's workshop discussion. And then there are a set of strategies that we kind of bundle together and refer to as tax scholarships, as per our self-proclaimed legendary certified public accountant Rick Darvis, who occasionally drops in on these talks. So today is focusing on the first category, the need-based formula, which is, I guess, effectuated when you apply for financial aid, which Pearl will talk about a little bit because she does, 400 families worth of financial aid applications every year. She's a financial aid maven. And there are formulas that govern the two major financial aid applications, namely the FAFSA, free application for federal student aid, and the CSS profile is the second one, which doesn't publish a formula, but we have sort of generally accepted principles, accounting principles and financial aid principles, I guess, behind that form. And then in terms of the actual formula, do you want to say the formula or do you want me to say it?
Go ahead.
Okay.
Go ahead.
I mean, I'm happy.
You're doing such a great job.
I'm happy to do your job, except the laundry. That's where I draw the line. Cost of attendance. So if you want to write this down and you want to know what the formula is specifically, not just to know it, but how you can use it in order to get more money. And that's really what we're talking about here. So you've got cost of attendance, COA.
Which
that's the top line.
I'll just interject.
Wait, we'll do the definitions. We're doing, stop. Just hold on. You let me do it. That is a song. And you let me do it though. So cost of attendance is on the top line, then minus SAI, which stands for Student Aid Index. It used to be the expected family contribution up until last year. SAI. So COA minus SAI equals need. That's the third line. Your financial need.
Not an acronym, the last one.
NEED.
Need.
Yeah. Well, not KNEAD.
Well, it's also the other two words.
Acronyms.
COA acronyms.
Yeah.
And
There's a lot of
SAI,
acronyms.
those are acronyms.
In this.
As is CSS,
Great.
as is FAFSA, as
Yeah.
is whatever. But need, what it equates to, is just need,
Nice.
not another acronym.
So many acronyms in financial aid. Right?
Yeah.
It's ridiculous. Because when you get the government involved, you get acronyms. You know, from the GAO or
Clear things up for all of you.
right. Well, and right. So also,
Designed to.
good point. Also, to be clear, this is the simplified. This is the second year of the simplified FAFSA. They simplified it so much last year that they had all these mistakes and delays, and they got it wrong.
And will again this year.
Well, you know, this is interesting. So a few times over the course of these shows, over the past, I'd say 8 to 10 months, after the delays and mistakes for the FAFSA for last year's kids became apparent, I think I said to you multiple times, I'm like, look, you know, FAFSA is like 70 questions or something, or maybe it's fewer than that at this point. The CSS profile is 200 or 300, depending on where you're applying. How come that never has problems? You know, that they've updated that continually. We never hear about it. And then lo and behold, about a month ago, I stumbled across an article about how this year, the Department of Ed, not Ed, but Education, Ed's department, brought in the head of the CSS profile to help them get it right this year.
Which is not a government agency. The CSS
Right.
profile is actually owned by a private entity.
Yeah, nonprofit college board. So anyway, so what we expect this year is there will be more delays, but there's apparently going to be a soft launch.
Right. There's going to
in
be
October.
In October 1st, there will be a soft launch for exactly 600 students.
Okay.
So
Not ours. We don't want to risk it.
no, and nor would I be one of those guinea pigs. In fact, in an ordinary year, I always wait about 2 weeks for the kinks to work out in an ordinary year. So anyway.
Okay. So so now you have the overview of the formula, and the key component of the formula is that student aid index, which is supposed to designate how much a family can pay for college. But why don't you take us through, number one, the top part. So it's COA minus your SAI, your student aid index, equals your financial need.
Right.
So talk briefly about the cost of attendance. Then I'll ask you some questions about the student aid index, and then we'll talk about strategies.
Okay. So cost of attendance, COA, is the cost of room, board, tuition, and fees for a single year at that university. That is the key, because as we can all agree, the cost of attendance at Nassau Community College is going to be wildly different than Columbia University. Both schools in New York, true, but have vastly different costs of attendance.
You know what's interesting?
What?
I know I'm doing to you what I told you not to do to me.
And it better be really interesting.
I would put this in the somewhat interesting category. The cost of attendance at I think NYU versus Dartmouth College, you know, so lower Manhattan versus rural New Hampshire is not that different, and it might actually be more expensive to go to Dartmouth
Really?
than to NYU or Columbia. Yeah. So there's not necessarily any rhyme or reason
exactly.
to this. Yeah,
Right.
that's apparent to the untrained eye.
Yeah. Okay. So that's cost of attendance. And obviously in this mathematical equation, as you'll see, that's going to determine whether or not you have need at that school. The next part of the formula is the SAI, Student Aid Index. That is, as Andy pointed out, the bulk of the formula and how everything is going to sway. That is made up of, most heavily, parent income, student income, okay, and that actually, barring any changes, current changes, assuming things are all the same, that number, your adjusted gross income in your income, you're on your income tax, and the base year for the year we're in now, which is the 25-26 application year, aid year, okay? For that application year, which now has started, you use the 2023 income tax.
So if you have someone graduates in 25, you're using your 2023 income taxes.
Right.
Watch your hand. You keep like almost hitting me.
I'm a hand talker.
I feel traumatized.
I'll keep them crossed
There you are.
for now. So that determines off the bat, okay, you're in a need-based bucket or you're not in a need-based bucket. Just on income alone. We have not even discussed anything about assets, but that is the first part of the inquiry. So if you're in a non-need-based category, the notion of moving your assets around and moving money out of the kids' names and all that stuff
So
is not as germane as when you're in a need-based bucket. Then the notion of how much will the assets infringe on your current eligibility. Okay, that is really the notion.
let me just sum up here. So you've got income, which is the most important component. You've got assets, which Pearl just alluded to, and then there's another 70-something factors that have to do with your age and whatever. But the two main things to focus on are income and assets. And what used to be much more important than we think will be this year is what?
Number of kids in school.
Bingo. So wicked, man.
I did, there was a comment like, hey, why are you talking about the sibling discount? So under the federal rules, this rule took effect this past year, the 24-25 season. Before the 24-25 season, if you had multiple kids in college at the same time, college, grad school, okay, yeah, frequently.
Ooh.
Yes. The school determining aid would give you a sibling discount for however many siblings you have, by that percent. So if you had 2 kids in school, then you would get it would be your SAI would be half as much as it would be if you only had 1 child in school. That changed this past year under the federal rules. So now, however many children you have in college at the same time, under the federal rules, is irrelevant. There is no more discount for that. You are treated the same as if you had 1 child in college. But there is frequently, okay, so there are about 4,000 or so schools that take the FAFSA, that all the schools, about 4,000 or so schools out there. A subset of those 4,000 schools, approximately 400 or so schools, require an additional form called the CSS profile. That form determines the amount of institutional aid you would receive at that school. Schools that require the CSS profile, in addition to the FAFSA in determining your aid, that is a notion that they're signaling to you they have institutional money to potentially award. Now,
wait, hang on. So just want to say this is all very complicated stuff. This is sort of a sneak preview of the workshop that we're running this Wednesday evening. The link to that is in the comments here. And if anyone has any questions, this is a great time to throw them in here. So Christine, good morning again. Chuck, Sel, Patrick, Oil Watcher, Patrick, he was there last week. Appreciate that. Dawn, Lenny Lane, not Penny Lane, Lenny Lane. Lila, Andrea, and Tolu. So if you guys have any questions
let us know
about financial aid specifically, that's today's topic. We're covering it briefly, even though it doesn't sound so briefly, because Pearl can go very deep in the stuff, which you need to do, honestly, to understand it, to understand how you get more money.
I just want you to comprehend it fully.
But the rest of the story is in Wednesday's presentation. And again, just joining us, the link is in the comments above. It's also on this page somewhere. Okay, So there's income and there's assets. Let's get into, so we talked about income being, it's your bottom line adjusted gross income. If you're self-employed, by the way, sometimes, or if you own real estate, for example, as an investment, sometimes parts of the income that was written off, like depreciation, might get added back. But there are arguments you can make. So we're talking about formulaic stuff, but we're not yet talking about, I don't think we will today, but we're not yet talking about the non-formulaic, appealable arguments you can make to say, in effect, I know this is how our boxes on the financial aid applications were filled out, but there's a story behind the boxes. Right. All right. So talk a little bit about the difference in the treatment of assets, and then I'll talk about maybe a couple of the strategies you can use to make more, to get more money. And then we'll take some questions, and then we'll wrap up. So
okay.
assets.
But I just want to give a little quick sentence, one last sentence, just because I don't want to leave a cliffhanger. On the CSS profile, required by about 400 or so schools, they've been silent as to their treatment of the sibling discount. So it's so new.
Which is good.
It is good. So that means that if you are applying to a CSS profile school, they might give you the sibling discount credit as they have in all the years before.
I would bet they would. And by the way, these are usually the more expensive private colleges.
And it's certainly an appealable argument you can make if they are going to lean that way.
Yeah, ironically, and I'll talk about this more in the presentation, the schools that charge the most tend to discount the most. And this might be one of the sources of discount.
Right.
Now can we talk about savings?
Sure, of course. Okay, so there is savings that you may have that is in the parent's name, and then there's savings you may have in the student's name. Those are treated in terms of the penalty hit differently. Money saved in the parent's name, and I'll get into the different places, but generally speaking, if they're not in an exempt place or if it's not an exempt asset and it's owned by the parents, and then you will incur a 5.64% penalty. So just to break that down in numbers, let's say a parent has $100,000 in parent assets, non-retirement assets. You would give up $5,640 of eligibility you otherwise had, judging the income alone. Now, for students, that number goes up to 25%. So if you have $100,000 in the student's name, you're giving up eligibility to the tune of $25,000 by leaving it there.
And this is more common than you think, because a lot of financial advisors who advise people to open up savings accounts for their children, or accountants or CPAs, they give this advice, which is well-intentioned, and it makes sense from
tax.
It makes sense for tax purposes.
Okay.
Yeah, I feel like there's an echo in here, but it's before I talked. That's so odd. Maybe I'm in a time warp. I don't know.
We shouldn't do this
on the air, because we never do this off the air, right? Okay. But for financial, so it could be good advice from one perspective, but from a financial aid perspective, this is one of the things that really messes up a lot of families, is that they've saved in the wrong places. So part of what Pearl does for our clients, and again, I'll be going into this in more detail on the presentation on Wednesday that I've mentioned about 28 times in the last 13 minutes, is all of the exempt places that you can put money where it doesn't penalize you. So we'll talk about a couple of those. Before I get to those, though, the other way to think about this is if you mistakenly include unincludable assets, meaning exempt assets. So if you look at the directions, I don't know why you would, but Pearl does. If you were to look at the directions of how to fill these forms out, it'll say, here's what's included, and it'll say like stocks, bonds, mutual funds, whatever. And then it'll list out all the things that should not be included when you're listing your assets. So do you want to talk about 2 of the 4?
Sure.
Okay, so I would say, you can correct me if I'm wrong, one of the biggest mistakes that people make is they overshare.
Yeah.
You know, we overshare about our little relationship here on social media, right? There's a lot of oversharing on social media. That's just annoying. But on the FAFSA, oversharing can cost you money. So a lot of people mistakenly, when they're asking the question, how much do you have saved, they'll put retirement assets like your IRA or your 401k or 403b, whatever.
Right.
Even though it very clearly says in the directions don't do that. And then what ends up happening is they lose eligibility, they lose money, and they self-sabotage.
And it's hard to unsee these things once you put them forward.
Right. If you then try, if you discover this because you watch this or some random presentation on the internet or something after you filed, and you're like, oh my God, what do I do? Yeah. And then you go back to the financial aid office and say, I made a mistake. That's a valid appeal. Well, yeah, but they may or may not, they may not rule in your favor on that appeal.
Exactly. It's an uphill battle that you don't need.
Okay, so that's one big mistake out of 4, one exemption, I should say, and then talk about the house.
Okay, so the value of your primary residence, nowhere except listing your address where it asks for your address. Should you mention the value of your home any place on the FAFSA? Period. Hard stop. End of story.
Put a pin in it.
Put a pin in it. No circling back. Okay.
We're going through corporate buzzwords as we
explain this. Yeah. Right.
Thanks to Barstool.
However, if you own an investment property personally, that's a different story. Then it counts as though you had the equity in that investment property in the bank as savings. It would incur that 5.64% penalty.
So if you're filling out your FAFSA and yourself, and you overshare again by including the value of your house as one of your assets, that will reduce your eligibility.
Yeah.
Also, if you're filling out your FAFSA and you're wondering, well, my house is exempt, what about my, I have a second home or investment properties, just to repeat what you said.
Right. It does count against you exactly as the equity in that investment property counts against you the same way if you had a CD in your bank, a CD or stocks, bonds, cash counts the same.
Yeah, by the way, cash does count. And sometimes we get questions like, well, what if I, stick it under the mattress or, will that still count against me? And the answer is they ask you about the cash.
Yep.
And sometimes we get questions like, well, what if I give it to, Uncle Jimmy, my child's uncle, my brother, just to hold for me? And my response is always, look, if you can get that money back at any time, then you haven't really given it away to anyone. So putting aside, whatever the tax consequences are, which I'm not competent to advise on, or any other considerations like that, in terms of if you still have possession, constructive possession of it, then you still have the money.
However, if we get the question, well, we have this money in my daughter's name, but we were thinking of buying her a car for college. Should we do that now or should we wait? Do it now. Do it now because you're going to defray, let's say, $25,000 from that account off your balance sheet. And great, you bought her a car. That's fine. That money is no longer there. And a big part of this, so we already know that we are held by the 2023 income year as the base year for the 25-26 application year. But our assets, there is no look back. They need to be true as of the day we file. So any changes you could make to improve your eligibility should be made before you file. And how those moves should be made will be discussed, I'd say, in much more detail on Wednesday.
What's on Wednesday?
Oh, we're having a financial aid webinar.
Right. So,
sounds different if I say.
Yeah, it is. So that's the thing about strategies, right? We can talk about them in a vacuum and give you sort of the academic version of what's happening. But in terms of the reality, like which Pearl just brought up, whether it makes sense to move money around, if it's going to help you or not, that's a very case-by-case, individualized type of discussion.
Yeah.
And I would say just if I had to come up with an estimate in terms of the percentage of people that I talk to where that could actually benefit them, it's probably somewhere around 25% of the people where it could make sense to take money that's in the wrong place, like in your kid's name, maybe a 529, or maybe in your own name or something else, and then put it into a place that is legally and ethically squarely in the rules, entirely exempt, so it doesn't penalize you. That can work. It doesn't work for everyone. You've got to look at penalties for selling the stuff.
Right.
You've got to look at a whole host of other considerations,
It's the whole
starting with your
pros and
income
cons.
and including the colleges you're applying to.
Right.
Those are two, I would say, under considered factors
Totally.
that are way more important than all the other stuff we're talking about in terms of 2 out of the 4 things that count against you that are exempt entirely, and all this other stuff formulaically.
I agree.
You agree?
I do.
Nice. All right. So I'll consider this last call for questions. I see a couple people just joining us: Margarita and Ruma and Thomas. And someone keeps posting information about the webinar we're having on Wednesday. Let me check and see how many people are actually registered out of morbid curiosity, because we got a lot of response for this one so far, and we're 2 days away. I'm going to say, here we go, 186 lucky people are registered so far, and we cap out at 300. I think we're going to hit it. Any other financial aid comments? Talked about a couple of mistakes. I think that's big.
Yep. We went through the formula.
Went through the formula as promised, the double secret formula. It's secret because no one knows about it. It's not because it's actually a secret.
Here,
it's published.
let me actually, I'm going to round out, because so we went through
Round
cost
away.
of attendance.
Yep.
We went through the student aid index
Mhm.
that is subtracted from the cost of attendance, which equals your need at that school. The next question is, oh, is it, so this is what I get? No.
Well, sometimes I think that when they look at the student aid index.
Yes,
Right.
exactly.
Yeah.
Right. That is just the number. The student aid index is the number based on this formula
Right.
that the federal government deems your family can pay for 1 year of college, period. So the other thing about need is the schools do not meet the same amount of need as one another. There are some schools that meet 100% of your need.
Like Ivy League and
Right.
fancy schools.
That costs more. And then there are schools that only meet 50% of your need, if that. So that also plays into how much, and that's a question you can always ask a school, how much of my demonstrated need does your school meet?
Yeah, most of these colleges will post that somewhere on their website.
Hidden
It can be a little
11 clicks.
It does take some. Yeah, exactly. So a lot of the financial aid information in general is kind of buried, even for us. It could take us 5 to 10 minutes, and a normie, a half hour to find this stuff. But it's all published more or less reliably by the College Board. If you go to collegeboard.org, and one place that I've been looking at a lot lately is the Common Data Set. So if you're interested in a certain college, every college reports information through a uniform way, which is referred to as the Common Data Set. They report maybe 16, 17 pages of spreadsheet information, including financial aid information, but also including, where I've been looking at, is what percentage of kids submitted their SAT or ACT scores last year,
Right.
and what's the middle 50%, what's the 25, what's the 75. So if you're interested in, University of Maryland, for example, and you want to know what percentage of need do they meet, or you want to know whether you should submit your SAT or ACT scores, you can search University of Maryland Common Data Set, COMMON Data Set, and you will get all sorts of information as you comb through the spreadsheets, particularly about financial aid stuff. And that was a very important point that Pearl just made, which is that just because you look one way in the formula doesn't mean that's the offer you're going to get across the board from every school, because we've seen wildly divergent offers. Some family that shows 100% need might get 50%, from one college and 0 from another school, because a lot of this is based on, well, I guess I said this at the beginning, based on where you apply. It's not just how you look and
preferential.
how much they want your child. That's a whole nother issue
It
too.
is, but it's real. And
So
it's there.
it's your income, that's the most important thing, and where you're applying, and then absolutely how desirable is your child, and then we get into your savings and a bunch of other stuff that go into the financial aid formulas.
Yeah.
So this is definitely stuff you're never going to hear. I know you don't hear this from your guidance counselor or anyone else.
Trained in this. It's not like we're all, but they're trained in one thing and it's not this. That's all.
Well, it's also a little politically incorrect to say that the reason you didn't get money is because you're not a visually diverse person, or because your grades and your scores are kind of below what they're hoping for, and you have to scratch and claw and figure out your way to get in.
But these things are true.
People don't like hearing that.
Right.
And guidance counselors, even if they were to know that, which I think very few do, why would they bother saying that to you? Because they'll get a complaint. They'll get a complaint about them. Yeah.
Exactly.
Yeah. Whereas we have a special complaint situation for us too. It's I don't care at all at lockwoodcollegeprep.com if you want to email us.
Yeah.
Was that aggressive? All right.
Touch.
I know, that's me. So I think I don't see any other comments other than my spastic posting and reposting of our link. So I think we should wrap up here. That was probably the nerdiest episode we've done in a long time. So so we do College Coffee Talk every Monday at 10 on our Facebook page, facebook.com/lockwoodcollegeprep. And then we're also, you might be watching this on YouTube or on TikTok or listening to it on our podcast, The College Admissions Edge, rebranded recently. Wherever you are watching this, if you agree that you're not going to get this advice anywhere else and you think it's helpful, I really recommend that you subscribe so you don't miss out. Feel free to share it. Pearl, you have the closing comments.
Oh, thank you. No, everything Andy said, and actually, if you do have other areas of interest that were not discussed today, because we're targeted today on a certain topic, please share the topic, the question you have about the college process altogether, any part of it, and we do take our topics from what our listeners want to learn about. So please let us know, and you will see the topic aired at some point along the way.
Yes, it's much better for you to tell us what you want to hear than for us to decide what you should hear.
And then with that, I wish you all a wonderful week, and we'll see you hopefully Wednesday night. And otherwise, we'll see you next Monday.
Bye-bye.